What is going on, investors? Hopefully, guys are doing well out there. We are going to pick up the story of Nvidia Corporation. The company reported their Q4 earnings after the bell yesterday, and it was a big family day for me, so I couldn't get to the video. But something extraordinary is happening here, and I think that's obvious. We come over here to Nvidia shares, and on the day, they're up 15%. That's on the heels of year to date being up over 50%, and over the last year, shares of the AI chip maker up over 226%. But something is extraordinarily not just happening to Nvidia. A lot of these revenues, in fact, all of the revenues that Nvidia is driving to this data center is going to translate into a product, a service, some software, a breakthrough, a medical breakthrough, a technology breakthrough, a robotics breakthrough down the road for another company. And that is what's so extraordinary for Nvidia. And that's where we have to focus as an investor. Look, if you've owned shares or you own shares of Nvidia, you're doing great. And the good news is if you don't own shares of Nvidia, it's actually not that bad, because this company is going to spur a lot of revenue growth and a lot of new products and a lot of new sources in the markets that should see similar type performance in the coming years. So stay focused. Don't feel like if you've missed Nvidia's run over the last year, 2 years, 3 years, whatever it's been, don't feel like you've missed the boat and you kind of throw your hands down to the side and you give up. No, Nvidia is actually going to be an enabler of a lot of goods and services that are coming, and that is very exciting. Now, also very exciting is the fact that Nvidia's Q4 results were spectacular, $22.1 billion. Come over here and show you it. I mean, we really have to kind of look sequentially, which is kind of quarter over quarter with Nvidia, because year over year, it's almost a different company. Revenues are up over 265% year over year, but a year ago for Nvidia is so long ago, when the company had just $6 billion in total revenue, just $3.6 billion in data center revenue. That has ballooned to over $18 billion just on the data center side. Total revenues coming in at $22 billion. Their core gaming business, which used to be the biggest part of this company's revenue center, that's still holding up strong. We're seeing sequentially year over year, you're down, or if you dip back to Q1 of 2023, you are down a little bit, but I mean, look, it's hard to pick holes in this type of results. Even sequentially, kind of quarter over quarter, we are growing, but the growth is starting to stabilize just a little bit. You went from 13.5 up to 18.1 up to 22. Now, some of you are correctly asking, where is the company going to be in the Q1? Nvidia always provides guidance. It always comes in, it seems like a little light as well. Revenues for the Q1 expected to be $24 billion. So we're going to go from 22 up to 24, maybe give them credit for another billion or two, maybe as high as $26 billion. That $24 billion level will show kind of a flattening of our total revenues, which you have to expect with Nvidia. At some point, the revenue just doesn't continue to go higher. And if we come over here and look at Wall Street estimates, there are some really like mega bulls on Wall Street that thinks revenue could still almost double from here, up to $45 billion, $40 billion. If you take kind of a blended average of all the estimates, most think that Nvidia will peak out in the next couple of years at about $29-30 billion worth of revenue. I got to tell you, that's actually a really wide spread between what the average estimate is and the high end. People are still trying to figure out where Nvidia's top end and peak growth rate is. If Nvidia's peak growth rate is up into the $40 billion worth of revenue, well, I tell you what, you could snap buy shares today and shares of this company will continue to outperform probably almost any other stock in the stock market. If Nvidia's revenue peaks out in kind of this mid-30s range, well, I think we're approaching a valuation which makes a lot of sense. We'll compare it to two other companies that Nvidia's passed in market cap, both Google and Amazon. here in a second. But I want to dive a little bit more into these numbers to show you how impressive these are. Again, we went from this is a completely different company from a year ago. I mean, it's literally like a new company. $6 billion last year, all the way up to $22 billion. More impressively is your cost of revenue didn't go up that much, so your gross profit ballooned to $16.8 billion. Now, when you've got a company like this, look at your sales, general, administrative. Last year on $6 billion in revenue, you spent $625 million on sales and marketing and other stuff. This year on $22 billion worth of revenue, you barely spent any more money there, up to $711. Research and development continues to move higher, but not that much, from about $2 billion up to $2.5 billion. So off $16.8 billion in gross profit, you spent about $3.2 in operating expenses. And that's it, guys. Company has a mountain of cash, so they're earning some interest income to the tune of about $500 million after you subtract what they're paying for their long-term debt. Net income at Nvidia coming in at $12.3 billion. You have to assume, next quarter, they're going to put up $24 billion. So they're going to go from 22 up to 24. We're going to assume all of this is likely to remain about the same. They might see a slight bump up in R&D, but I doubt it. So the company's probably going to print maybe $13.5 billion to that net income side. Now, when you compare it to other companies that it has just recently surpassed on that market cap, both of these companies have astronomically higher revenues. As it relates to Google, they had $86 billion worth of revenue in the most recent quarter. Again, Nvidia put up 22. When you flow through all the expenses, Google put up a solid $20.7 billion worth of net income. Again, a lot of that on the heels of a lot of cost cuts since last year. They printed an Nvidia like $13.6 billion to kind of the net income operating profit side. Nvidia also just recently passed Amazon in terms of total market cap. Now, Amazon takes the cake on total revenue at $170 billion, but prints almost an identical number to the operating and net income side as it relates to Nvidia. So Nvidia is growing their revenues faster than both Amazon and Google, and it's printing similar, if not better, net income profit numbers. So I actually think this company, based on the valuation today, is certainly worth it. The question that you have to answer for yourself is, can Nvidia push revenues up into over the $40 billion range? If it does, and it can, well, this stock can continue to rally and outperform the Googles and the Amazons. If we stall out here very soon, we go from 24 up to close to 30, and that's it with Nvidia, then you're looking at a stock that's going to perform relatively well, but probably not have that huge outperformance that we've seen really over the last year and probably definitely over the last 5 years as well. Deeper into the financials paints a glorious story. The company is stacking up mountains of cash. Look at your total current assets, which is largely cash and some inventory, from $23 billion in January of last year all the way up to $44 billion. They have some debt on the books, but it's not a big deal. They're earning a lot of interest on that cash balance. From a cash flow perspective, company prints an operating cash flow number that's almost identical to their net income. So whatever Nvidia prints from a net income perspective is a very close number to operating cash flows. And being a chip designer and not a chip fabricator, they're not in the same boat as TSM. They're not in the same boat as Intel, where they're spending, like, if you go look at what Intel is spending on property, plant, and equipment, let alone TSM. I mean, these companies spend tens of billions of dollars on property, plant, and equipment. When you're just designing the chips, you have like an operating lease, a beautiful office that I was just at a couple of months ago. But other than that, and employees, obviously, you don't have a lot to invest in. In fact, the company just bought marketable securities, which is basically just parking the cash that they have in some interest-bearing stuff. Now, they are repurchasing the stock to the tune of $2.7 billion. I don't know how wildly excited you are as a shareholder of Nvidia, with shares up over 222%, that they continue to buy back the stock at these elevated levels. But there's not much else this company can do. Their products are seeing a culmination of demand and R&D over really a long period of time, and it's it's culminated into just sensational revenue growth. The last thing, as I'll say to Nvidia, and I want to emphasize this as what I talked about, is Nvidia's customers. Who is buying this $18 billion in data center? Last quarter was 14.5. The quarter before that, it was 10. Notice a year ago, it was just $3.6 billion. We've increased spend on the data center chips that Nvidia makes by sixfold in just a year. And even as we start to look out into next year, as you look at Q2, it'll likely be a twofold, maybe even a threefold increase year over year. The customers that are buying this are the Microsofts, are the Googles, Apples, Amazon, tons of other cloud service providers that are putting these in data centers, and then they're going to lease them to startups and other small and mid-sized companies. This is going to healthcare. This is going to fintech. This is going to insurance. This is going to tech. This is going to software. These companies don't do a tenfold increase in their spend in the data center without thinking there's going to be some ROI on the back end. That's why, if you've missed the boat on Nvidia, I really wouldn't be overly concerned. I would be going out and looking at who are the software providers, who are the med tech companies, who are the financial companies, the insurance companies that are going to be implementing and using AI to make their business more profitable, to introduce new products and services and software that they're going to be able to charge their customers more and more money and generate more and more profits. That's where I would be focused in this market. If you've missed Nvidia, or even if you have Nvidia shares, I wouldn't necessarily want to continue. You're probably way overweight given the performance of this stock. I think you double down, but you don't double down in Nvidia. You double down on the companies that are buying this company's data center products. And again, those are the large corporations that are going to use this to create new software and new services. Technically, the stock is in outer space. It is past the moon. It is past the sun. We are in new stratosphere as it relates to Nvidia. It's making obviously just a very, very steep uptrend. Pullbacks in this stock should be purchased. The ideal range is between these two green lines. Now, obviously, over the past 5 or 6 years or so, you've had some moments where you've traded in these green line areas. That's where you're picking up Nvidia. You should meet some overhead resistance probably up here at, surprisingly enough, all the way up here at like 970. So you got really, from again, technically, you've got $200 to run before you meet some kind of overhead resistance. You'd expect something, at least a reversion back to the mean, maybe underneath it. That's where you'd pick up shares. But again, you're going to have so many software companies, so many med tech, insurance, fintech. There's very few sectors that are going to benefit from this type of revenue acceleration. This is extraordinary for Nvidia, but it's also extraordinary for a lot of other stocks. And so while I'm incredibly excited about Nvidia, these are fantastic results. Obviously, the stock is being rewarded and shareholders are being rewarded, but there's a lot more to come. AI is not a bubble, and if it is a bubble, it is still a tiny, tiny little bubble that is going to inflate tremendously over the next couple of years. Fortunes will be made in the stock market over the next several years because of this type of acceleration in investment. And again, consumers are not buying Nvidia's products. Other businesses are buying it to create other goods and services and products and profits and revenue streams for investors and shareholders. You should be putting your money into this market on any sign of weakness, largely because of what's happening at Nvidia. Hopefully, you guys enjoyed today's video. Be back again tomorrow. Good luck with your investments.